Thank you very much. So these are our panelists today. So giving it a little context, a lot has been spoken about the challenges and the benefits of involving the last mile in different interventions, and also increasing their access to services. And increasingly, technology has been spoken to as one of the avenues that is being leveraged to do this. So our conversation today is around what is this key role of the last mile in digital transformation. Why is the last person, why is my grandmother in Namutumba important in this journey of digital transformation? Why do we need the last mile in here? So getting into the questions, I will start with Stella.
Hello, everyone.
Yes, please.
I'm just greeting.
Oh, okay. Thank you. So the question is, there's increasingly more attention being drawn to the last mile phase of digital transformation. Why is this? If you could give us a little context before everyone else delves in. Thank you.
Yes. Last mile transformation is all about giving, I work with farmers, giving that last customer fast services, products on time, and being able to have that product level, I don't know how to put it in English, but being able to offer services to the customer in the best possible way. So let's take, for example, I work with farmers. 40% of these farmers actually don't even have records. One of the things we do at Hamwe is to digitize that unlock, those records for farmers, and also digitize the entire value chain. Because you look at their production levels, they're too low. Even when we have about 80% of people farming, they are barely doing 30% of what they should actually be doing. So when you talk about last mile, if I go down there and digitize their records, I give them the opportunity to be able to get services, yeah? Things like market linkages, things like availability of quality seed, which without an economic identity or without having digital records, without having that access to in Namutumba, to having records on your mom will not be known.
True.
Doesn't have an economic identity because she's. So one of the things we're doing is to clean out that. For us in Hamwe, we actually call those farmers last mile. They're farmers, not because we're not dealing with other customers. Our customers are farmers. So we are looking at having that level cleaned or transformed so that even the person in Namutumba has farming records, is able to access these services by even just SMSing and everything. Because before, if you don't have these, the value chain actors having these digital records, production, the supplier being able to know who buys his, for example, agro suppliers. Most of them don't know who actually purchases their agro inputs. The farmer doesn't know whether they're even available. The farmer doesn't even know whether what agronomic information that there is. So by digitizing, by transforming that, sanitizing that ground level, the customers, the farmers down there, yeah, is actually a very good way of transforming the last mile.
Thank you very much, Stella.
Yes.
From what you've just said, and also by the fact that Emmanuel is dealing with MSMEs, taking services closer to MSMEs, do fintechs need to be more cognizant of these last mile interventions to realize lasting customer interventions?
Thank you. I think that fintechs need to properly understand the challenges that these everyday people are facing.
Okay.
Because you can't love what you don't know. and you can't serve what you don't know. So it's important that once you have understood, then you're able to design solutions that actually would cater for the needs of the people that you are targeting this solution to. A very good example at ChapChap, some of the things that we have done and probably helped a lot of people. While we are onboarding the micro and medium enterprises, majority of these enterprises don't even have an email address. Some of them have never accessed Facebook, neither WhatsApp. So that means that our sales team spend a lot of time educating them on some of these solutions that actually help them understand the strength and the power of what technology can actually do in their businesses. So it's very important, and it's sad that today many of the fintechs are focused so much on what the investor thinks rather than what the customer wants. And I think when you understand what your customer wants and you start carving a product, what you're doing is that you are giving value. And each time you give value, in return, what you have is money. And for me, we strongly believe that we need to understand what the customer needs, and then what the problem they're facing, and then carve a product towards that challenge they're having.
Okay, thank you very much, Emmanuel. So still speaking about the last mile, if I may take it back to Stella, given what Emmanuel has just spoken about, carving out products that are relevant to a certain sector, we cannot leave this conversation without talking about women and youths. I am passionate about agriculture. I am passionate about agribusiness. And so my question to you would be, leveraging on that, what Emmanuel has just said, how can the private sector leverage agri-tech such as yourselves to scale the last mile youths and women agri-led businesses? Because the reason why I'm focusing on agribusinesses is largely because 70% of the population really is into agriculture. If I had to ask anyone online or the panelists, how many of you were educated by agriculture, chances are all of us would put up our hands. So, how do we leverage those opportunities? Stella, over to you, please.
We do. When you look at some of the SDGs, one of them is actually equality. And at Hamwe, I'm sorry to say, you can see we're mostly women. One of the things we've actually done is, because most of the farmers are actually women, we've taken an initiative to even talk to partners who are also in the private sector to see how, let me give you an example. Recently we were talking with MTN, and MTN, we told them we want 10,000 small phones, feature phones. We don't have money. And so MTN says, can you bring 30%? And then they asked us, what are you going to do with these phones? And I told them that most of the women that we are saying we are going to digitize these women, we are going to digitize agriculture, sanitize their records and everything, but they do not have any digital tool. And a phone goes for 50,000. This woman actually may have, if you have 1 acre, you have five bags, you can afford the phone. But because there's a culture down there that says men, actually I've even heard people say men will take over the phone, they will do this. But when you consciously offer them a service, for example, they say now, these phones have come from Hamwe, you are supposed to use them to order for your agro inputs. You're supposed to use this. The ladies are the ones who make these orders. And so we have worked, and we feel that if the private sector doesn't think about the norms that the culture says a man should do this, and focuses and say, we need the youth, we need the women to be able to access these services, and they deliberately, like people like ChapChap, you go and decide after every shop you see a man, you jump them. You deliberately go to the shops of the women. There is no book out there actually explaining to you why. I was one time asked by UNCDF, how come you have 70% of the women in your system? I said, we deliberately go for farming groups which have women leaders. First and foremost, we come to an area, for example, in Mtumba, we look at 10 MBOs. Which one is led by a woman or has a vice that is a woman? Deliberate efforts will help this last mile transformation for women and the youth. In Arua, for example, they had groups, over 850 groups, and none of them was having youths. And they told them, so how am I going to get someone who uses a smartphone? One of the local governments said, what about if someone is 40? Can't they do the profiling of the farmers? I said, no. How can you tell me you're 40 and you don't have a 20-year-old who can profile farmers? If your group doesn't have a youth, then we're not working with that group. You understand? So the private sector has to take an initiative to actually make this work.
Okay. Thank you very much. So what I'm hearing is it starts and largely is driven by deliberate effort on our part as key stakeholders in the sector. You've touched the issue of costs, the cost of digitization, the cost of getting the last mile into this space. Vincent, still speaking to the issue of cost, there's the issue of digital phobia, as we'd like to call it, largely attributed to limited awareness and the high costs of automation, not just using agri-techs, but basically the fast cost that someone has to incur to actually get into this space. So how would financial institutions, because you work in the financial institution space, especially the lower tier ones who are deemed most cost sensitive, balance cost with adoption to drive utilization of digital channels, of going the extra mile to actually use the digital channels, not just for financial services, but for all the other products that are being developed?
Thank you. Thank you very much, Anne. Let me also just add that cost, the initial cost, ends up being the reason why financial services remain costly in this country. And so that's a very important question. There is a need to appreciate that when we discuss financial inclusion, we are ideally also talking about digital inclusion, ICT inclusion, because that has been identified as a key enabler of that transformation. So what we have done as FutureLink is to bring together, pulling together the different institutions, the different agents of economic transformation within the communities, and bringing them together on one platform, having this infrastructure, we've been able to reduce the cost because then you have resources brought together. So that is number one. So with about over close to 300 circles now in this country, on one infrastructure, we've been able to reduce the cost of infrastructure monthly costs from about $200, that's about 700,000, to around 70,000 shillings. Now, when that story comes out, the people who used to fear technology as being expensive are empowered. Then their possibilities become eminent. They're able to actually begin to think about what else can we then do. And so that is the beginning of a journey. That the discussions with the different stakeholders, with the MNOs, with the development partners, with fintechs, we all need to appreciate that the essence of our work ought to be the enhancement of financial resilience of our people. And that begins with cost reduction of the maintenance of infrastructure. That is an empowerment to the end consumer to begin telling his story. Yeah.
Okay. Thank you very much. If I may play devil's advocate, one would argue on the other side, when you're dealing with smallholder, MSMEs largely. One would argue that the issue of cost at some point doesn't play a huge role, and then it becomes an issue of knowing the benefit of what they are taking. I'll give you an example. Someone will go to a money lender and get money at 20% because the turnaround time is super, and walk away from a bank that is offering money at probably 1.5%. So if we're taking the same argument in the digital transformation space, what are we doing as fintechs to ensure that we increase uptake beyond just looking at the cost, beyond looking at cost being the deterring factor? What is being done?
So, and indeed you're very right, because access to credit, affordable credit has been identified as a more compelling driver for financial services more than convenience. And for a long time, fintechs have focused at convenience, regardless of at what cost, which cost, of course, ends up increasing the cost of financial services. But it's important to understand that for the bigger picture and for the long term, if we do not address affordability, then we are not addressing sustainability. So it's one thing to have something on the market, but if the end consumer, your customer, is not going to sustainably buy from you, you are doing nothing. So you'll just be here for 1 month, and in a time like COVID, with lockdown, with your customers, 70% of your customers not being able to buy and use your products, then you actually close. And this is really an explanation of why we have, in the digital, in the fintech area, we have so many accounts that have been opened. But when you compare with usage, active usage, you have, about 10%. That explains the issues that we have either in the usability but also in affordability. So it's a key area that we have to really address right from the beginning.
Okay. Thank you very much, Vincent. Brian, if I may come to you. You are an apex body. UCAFS is an apex body. And one of the roles that you have is to shape the adaptive behavior of your members so that they can adopt emerging trends such as digitization, as well as adapting to the business environment, COVID, and things like that. So what are some of your first-hand insights on how to make digitization more attractive and affordable to drive utilization by the last mile, coming from a financier's perspective?
Okay, thank you, Anne, for the question. In 2018, UCAFS, together with ABI, commissioned a baseline study, and the report was around 177 circles that we actually surveyed. Only 22 had an MIS. And also, their staff was not literate on how to use the MIS. And also, of those 177 circles, a few, I would say, like 20%, they never had the infrastructure to accommodate the digitization. Of course, for a circle to be automated, it has to have the infrastructure. And that's why UCAF, together with ABI, invested in a lot of money, around 6.5 billion, through our project of digital financing through cooperatives. And after that, the results have been so good because as at June 2021, we've been able to connect over 195 circles. Over 2,000 staff have been trained on how to use the MIS. But most importantly, the members of the circles, because that is where the target is, over 200,000 of them have been mapped onto a mobile banking system called MCircle. And of course, this has been a great achievement because technology is the way to go for all the Tier 4s. Now, we know that over 75% of Ugandans actually lean on group lending methodologies like SACCOs or VSLAs to access financial services. And most of these small ones actually don't have an MIS. This comes with its own disadvantages of poor financial management, poor credit management, poor risk management, high risks of fraud, poor inconveniences, and etc. So for the attractiveness of digitalization comes with transparency in records, because record keeping is easier. That means that either reporting or reconciliation is by a click of a button. And also for Tier 4s, or for some SACCOs which have branches, it is easier for inter-branch connectivity if they are digitized with a cloud-based system. Previously, a manager would have to ride a motorcycle to actually get reports of the branches and then come and consolidate them. But right now, it is by a click of a button when someone is in office. And also, during this COVID era, the SACCOs have been operating because they are digitalized. Managers don't have to go to office. As long as they have a router and they are at home, they can actually do the oversight from home. Also, the mapping of the members onto the digital system into mobile banking has increased the convenience for members, in that now they can access their services of the SACCOs wherever they are and whenever they want. Previously, a member would be worried if they shifted, maybe if they migrated from that place to another, but because they can access their accounts on their phones, that means that even the dormancy in SACCOs has reduced. And also, digitization comes with other benefits of income from the transactional charges. However, the affordability part is, like Vincent was saying, we urge you fintechs to actually subsidize their software as much as possible. I know when you're developing for the financial returns, but we are looking at small institutions here. So that means that I would urge you, the software providers, to actually subsidize their software, and also for the small Tier 4s to partner with their apex institutions, together with the development partners, like the arrangement we had in Diffico, so that they can be able to access an MIS and be digitized. Also, the key telecom companies like MTN and Airtel would urge them to a bit subsidize the costs of the transactions, either when someone is saving with their SACCO, or when they are withdrawing, or when they are checking their balance, so that it can be affordable. And of course, all this can be achieved if we do a lot of sensitization, because we are targeting the members of the SACCOs. They may not be able to know how to use the systems, how to use their phones to access their accounts, but we've put in a lot of energy to make sure that we train and sensitize them on how to use their phones to access the services at the SACCO. And that's why we've been able to successfully launch mobile banking transactions in over 50 SACCOs across the country. Thank you.
Thank you very much, Brian. Clearly, the last mile is the individuals in the rural communities that are very, very key if we're going to get any digital transformation going in this nation. You spoke about COVID. If I may go back to Emmanuel, there have been challenges and there have been learnings that we have taken during this COVID period that have been brought on by COVID. What are some of the prospects that you see for scaling an all-inclusive business model for the last mile? Because we are looking at the financial services side of it, but what about from the MSME side? How do we do that?
So in 2018, when we were actually starting this journey and working closely with micro and small medium enterprises, I remember being hosted on NBS TV, and one thing that we discussed, we said that it's important for micro and small businesses mainly to adopt to technology so that they're able to exist tomorrow. And this is a statement that I clearly remember mentioning. The reason why I said that, and not foreseeing COVID, but that's destined to happen, because we in the developed worlds, like in the US, we have big giants like Amazon who have stepped on to the micro and small medium enterprises, and they don't exist tomorrow. But when you look at the value and the key roles that this sector plays, for example, in Uganda, where they employ 50% of the population, of the employee population, and they contribute almost 40% to the GDP. So what happened during COVID is when we had the first lockdown, 40% of the businesses that we're actually working with closed shop, because they were in areas where the government had put barriers to entry, so they couldn't access their shops. So that means that business had to stop. Now, when the lockdown, when the country was opened and people had to go back to their normal businesses, a huge number of business owners that we were working with had actually consumed the money that they had made in the past years. They had to pay for their rent, they had to eat, and they're not making any revenues. So they had to come back to business, but they had no way of doing that. Now, what was so interesting is that what we had basically had insisted, showing them how to use the ChapChap application, track their records, track their inventory. It was interesting that we had a conversation with a financial institution that came on board and said, ChapChap, what do you have? What data do you have for this particular group of people that we can consume, credit score, and provide credit to them? It's so interesting today that majority of the businesses that we are working with are able to access credit without collateral. And many of them have never been, we don't even know how, the financial providers don't know how they look like, apart from the KYC that ChapChap has. And they were able to actually revamp their businesses and get back to business. So for us at the beginning, and until today, is something that I'll keep on insisting, is that it shouldn't be about COVID. Technology is not something where you'd say we moved from agriculture, we came to industrialization. When it leaves you, when the plane leaves you, you can't catch up with it. Sure. So it's important that we take these lessons and put them into practice, and especially where the government, the private sector, there's already infrastructure that is laid. And all what we have to do is just ride on that infrastructure. We don't have to spend too much money to build that infrastructure. And for the micro and medium enterprises that are building, I would say, playing part in building this economy, it's important that they have to adopt to technology. So that when you have big giants like Amazon coming to penetrate Africa, or Uganda in particular, they look at you as a partner, not as somebody they can step on. Because, see, the value that they bring is bigger than what a micro and medium enterprise as a single entity can do. So I believe that the prospects that we have and the advantage that we have right now is that many people have woken up to realize that there's a giant called technology that we have to adopt to. So today, if you realize before the lockdown, our acquisition has increased by about 300%. And it's now easier each time we go and meet Mukasa or Jane in her shop and we say, we want to help you digitize your trade, increase your revenue, help you access credit so that you can grow. And all you have to do is just be disciplined and follow these simple steps. And all of a sudden you see the attention they're giving to you today is much different than they were giving to us a few years ago before we had the pandemic. So I strongly believe that for this to happen, it is not a single company that is going to enable this solution work. It's going to be, it needs a collaborative and partnerships from different players to come together and see us actually get the micro and medium enterprises to where they need to. And it's basically simple. If we can break down the barriers that prevent them from maximizing their full potential so that there's an equal play field, then that will be a game changer for this particular target group. Thank you.
Thank you very much, Emmanuel. So what I'm hearing you say is like, just like Stella said, that there has to be deliberate effort in driving the digital transformation agenda. And also the collaborative effort. No single entity, no single fintech, no single bank or agri-tech is actually going to be able to do this alone. So we all need to join hands to drive this digitization agenda. Then also what I hear coming through, the issue of shared services in as much as possible to reduce the cost, such that the argument is taken away from cost and it becomes an issue of value, of what value is being given by the fintechs. Like Emmanuel has said, if you go to a shop and you can sell to them the value of what this, if it's an app or whatever product it is, of what it can do for their businesses, the transformation that can come through by adopting these technologies, then that is something that we'll be able to sell. Because at the end of it all, the MSMEs will be able to actually achieve more than what they invested anyway. So, so more and more we see that involving the last mile is very, very crucial if we are going to get this digital agenda. First of all, because they are the majority in the country, and also because minds really need to be turned around and be progressive to keep moving from one technological aspect to the other. So right now I will open up the discussion, the conversation, to our colleagues that are online, to our viewers online. Let me see if there are any questions. You are welcome to send through your questions, and we'll be able to have one of our panelists answer them. Okay, so while we wait for the questions to come through, I will request any of the panelists, if there's a burning issue that you'd like a burning issue that we haven't touched, that you think our viewers need to hear, you're open to speak to it, even as we wait for the questions to come through.
Perhaps, and just as for a matter of clarity, discussing, the services going to the last mile, I think in a nutshell, begins with de-risking their environment. And I think this is cutting across all the different speakers here. Because if you do not de-risk the environment, the ecosystem that the last mile individual operates, then you continue to use that very risky environment as the reason to make services unaffordable by the impediments of price. So I think that de-risking the ecosystem of the last mile is an agenda that must get sufficient effort. And lastly, of course, the frontiers to appreciate that the essence of our work ought to be the value that we are giving. So efficiency is no longer the only issue that we should front. We should be able to see that there is money that remains in the pockets of the people we are serving, that the people are now and again enhancing their capacity to consume the services, and they can determine and participate in their own destiny. Yeah, thank you.
Thank you very much. Anything else by any of our panelists?
Yeah,
Yes, Stella.
Just to give you a little bit of de-risking, as he has said, we work with cooperatives. Most of them actually want the service. They want to digitize. They want to have their farmers' records, production records on file. But most of the times, they actually have no cost. They have no clue on how much it's going to cost. They have actually, some of them don't even know that a computer is just 1.5 million. When we were at a cooperative in Kigezi, the board members actually said, what, 1.5? We can buy that. And then we told them about data costs, monthly costs. They don't want that. So they should be, a fintech should have a social aspect to it. For example, we decided that if we are going to have 28 cooperatives on the system, why are we still charging them hosting fee? We know for sure, all of us, that hosting, for $200, I can have 500 cooperatives onto my platform, and that's enough hosting. But what I've seen in most fintechs is they give a system, they are charging a monthly rate, they are charging hosting fees, they are charging. So if we can, like he said, reduce those costs, like Vincent said, we reduce those costs completely because we know they are not necessary. Yes, this is how we've been charging because we had few clients. But if you remove those monthly costs, I've noticed that the uptake for my system, for our farmer management system, has gone so high by not having those monthly costs. I know that they are necessary, but I know that if I have more of these clients, $200, that means I just need $1 from each of them. Why should I put a monthly cost to it? I can incur this, and then I get more active farmers onto the platform, I get more cooperatives onto the platform, and have digital records, which is actually very good data. I'm actually happy to say that using this data, production data from some of these cooperatives, one of the banks has actually been able to offer credit to the farmers just using their production records. You understand? Like he said, here we're using just their production records. After 3 seasons, you know that Emmanuel has like 2 acres, is capable of getting 2 million per season. And so you're able to give them. And they're not giving them cash, actually. They're giving them in form of inputs, fertilizer, seed, and tractor hire services. So you get credit so you can open more land and then more production and then you pay using the produce, no cash invested in this. So if we can, like he said, we de-risk this, make sure that it's not so complicated. And even the phobia, what we have done about the phobia, we've gotten digital agents to talk to the farmers. Some farmers have phones, but they have never sent an SMS. They don't want to. The only SMS they look at is mobile money. They will open that one because it says mobile money. The others they want. So we have gotten digital agents, we call them digital entrepreneurs, community entrepreneurs, who earn a commission by making sure that the farmer is active on the system. They earn a commission when a farmer orders for inputs. They earn a commission when a farmer pays for inputs. You understand? Eh? So those are some of the things that we can do to remove that phobia, to de-risk their usage of this digital transformation.
Okay.
The last mile, getting them on board. We need to do several social aspects. And I urge my fellow fintechs to try it out. Have a go-between, and with time they will be free to actually access the system themselves. But for now, if you can have a digital community entrepreneur who involves themselves and tells them, look here, if you do this, you can access the system, you can get price advisory and all that.
Thank you very much, Stella. Maybe that is something that FITSPA, as with its advocacy role, can actually take up. That's the kind of conversation that I think would be a good one to have with the fintech's apex body. That would be a discussion for another day. So, in the absence of any questions, I will invite the panelists to give their parting shots. Any last words? We'll start with Brian.
Thank you, Anne, and thank you, FITSPA, for the hosting. I would say SACCOs must cope up with the technology wave in order for them to remain active, sustainable, and competitive. Because with the introduction of the regulator, that is UMRA, where they must be sending some reports, it will be ideal for them to be automated. And of course, it would improve on their KYCs. I mean, the KPIs, that is the key performance indicators. And also the accountability for members would actually be there, because now SACCO members wouldn't be afraid to have accounts in SACCOs. Previously they would, but now because they know that they can have their accounts on their phones, it would be a great accountability. And as their financial apex, we promise that we are going to continue with the connections, and we are also going to continue to provide support both to the staff and to the members of the circles to make sure that they are able to use their phones to access financial services wherever they are and whenever they are. Thank you.
Thank you very much, Brian. If I may sneak in a question, there's a question that has come through. Now, kindly pardon me, I would like to have this answered. The question is, what are some of the efforts that your panelists, your companies, are taking to ensure beneficiaries choose digital options in cases where non-digital ones are readily available and often preferred, even when they have access to digital solutions? It's a case of there's a digital solution, there's a non-digital solution. What are some of those efforts that you're taking, to push people, to help people towards choosing the digital options? Anyone? Yes.
For my case, I'll talk about the Dukas.
Okay.
They have an option of maintaining a counter book to keep records. And they have an option of using an application to literally to track their solution. And see, what you have with a counter book is basically you registering your sales. So at the end of the day, it's not going to give you a detailed report that you'd want to tell you how your business is performing. Yet you have a digital solution which tracks your sales, tracks your inventory, tracks your cost of goods, tracks your expenditure. At the end of the month, you're able to know how the performance of your business in terms of health. So I think that there could be a non-digital solution available, but the question is, to what extent would it give you the results that you'd actually require to succeed?
Okay. So it goes back still to the issue of sell the benefit, sell the value that is being created by digital channels. Okay. Vincent, you look like you
Oh, yes. Yeah, thank you.
Time is fast spent, but in 1 minute.
Yes. Just within our model, FutureLink runs a banking as a service model. So that means that you have institutions being able to offer banking services without necessarily having to own and maintain their own infrastructure. So we have the digital channels through the MSA core payment gateway, but we also have the option for the customer going to the banking hall and transacting just the normal way. But in that process, we are able to demonstrate the two options and the cost benefit of using the digital channels as compared to the where someone has to physically walk into a banking hall. And I think that is a valid point, so that the consumer is empowered to make an informed take up an informed position, because that way, then they sustain their choices. Yeah.
Okay. So at all fronts, it still sells the value. Yes. What is the value being created by fintechs? What's the value that is being created by digital channels? So any parting shots? Emma, then Stella, then Vincent.
Thank you, Anne. I would also like to extend my thanks to FITSPA for making this possible and hosting us. For me, it would be more seeking for many of the fintechs and the partners, especially those who are targeting the micro and medium enterprises, to look at more at collaboration rather than disruption. Okay. Because it's important that if I've met an organization in existence, all what I have to do is tap into their infrastructure and see how I can extend that. At the end of the day, there are not so many people who are going to be affected. And most importantly, for the small businesses out there, I would encourage majority of them to look at technology and see what would suit them to enable them propel. For the world we are going to is going to be very challenging. For I always tell people that technology does not knock on your door, it gets into your door. It doesn't ask for permission. So it's important that we take time to understand what technology can bring to our ecosystem, and also what solution, what add value can we bring to these customers through this technology. Thank you.
Thank you very much. So it's collaboration over disruption. Yes. That's my takeaway. Okay, yes, Stella, in a minute.
Okay. Thank you very much for, I would like to thank FITSPA partners for having this occasion. I was actually very impressed that I was invited. I didn't know we even had one coming up. Secondly, we are talking digital. And I'm going to tell you, I was in Mbale last week. Even in Mbale town, on the street, there are pockets. In an office, I couldn't download something. We have a problem with internet outside Kampala. We are not going to be able to digitize in Amlata when the internet is not there. I've been told, and I know Nita Yu was here. Seriously, help us. We can't digitize without internet. We are working with offline. So if I'm going to do a GPS tracker of a GPS coordinates of a farm, and I have to do it when I go to the trading center, and then those are not proper coordinates. I'm having information that is half-baked because there is no internet. And there is no network. I'm not only talking about data. There is no network. Someone can't access their mobile money until evening when somehow the network comes back. We are saying that fintechs are offering a platform where I can access my money when I get it. But now I can't even get my money. And I'm not talking about 20 kilometers out of these districts up country. I'm talking about 3 kilometers. 3 kilometers and I can't call, I can't access my mobile money or Airtel money, I'm begging the people responsible, and I know Nitayu was here, we can't digitize, we can't transform if we can't have systems. They can't just be in Kampala, they have to be in Amlata, they have to be in Zombo. Thank you very much.
Thank you very much, Stella. That's the call to Nitayu. And finally, Vincent.
Mine is an appreciation for FITSPA and also the different stakeholders, particularly fintechs out there who have participated in this event. And my parting shots is that we ought to continue to remember that the essence of our work is the enhancement of the financial resilience of the end consumer. And so as we look into our core purpose, we do hope that that can remain a sustained guiding star in our work as we choose partnerships that work for the end consumer. Thank you very much.
So thank you very much, Vincent. Thank you, ladies and gentlemen, for being part of this conversation. And thank you very much, our lovely panelists. Let's do this again some other time. Have a good evening.
A big round of applause to Ms. Anne-Marie for conducting this discussion. Thank you so much, Ms. Anne-Marie, and thank you for the panelists as well. We had a session that was running concurrently that was led by Ms. Rashmi Pillai, and they were discussing sharing experiences and strategies in terms of funding for fintechs. It's just a few highlights from this particular session on the last mile in digital transformation. I'll just do a quick run through my key takeouts. So fintechs need to understand the specific needs and challenges that are faced by the target segment in the last mile if they are to develop solutions that are truly transformational. And I believe that's why we're in this space. The private sector should be alive to the limiting social cultural norms and be deliberate about interventions in the last mile. Otherwise, all efforts will be futile. Access to affordable credit versus convenience has been a running concern for this target segment, and fintechs and financial institutions as well need to subsidize their products and solutions to allow for scale and reach. But more importantly, there should be a focus on driving awareness on the value or the benefit. And of course, there is the SME and MME sector, which plays a significant role in the economy. And while technology has become more critical in the COVID pandemic, it cannot just be about the impact of the pandemic, but rather focus on the future. And what the pandemic has done essentially is just open up our eyes to the power of technology. And we must keep up the digitization momentum because it is the future. This will take deliberate effort towards collaboration from different players, and there needs to be a lot of effort in de-risking digitization in the last mile. Those are just a few takeouts from the conversation on the key role of the last mile in digital transformation. And my co-host, Michael, will come and give us some highlights from sharing experiences and strategies in terms of funding for fintechs.